right. Well, meantime, check out the move in natural gas, spiking more than 8% this weekend, more than 14% in Europe as traders digest reports of a Ukraine offensive into southwestern Russia. The energy markets are also closely watching developments in the Middle East, threats of retaliation against Israel by Iran. Joining us now, Bill Perkins, founder and managing partner of Skylar Capital. Bill, it's great to have you back on the show.
Great to be here.
There's a lot I want to get to with you, but first I think we've got to start with geopolitics. I mean, here in the U.S., nat gas is pacing for the best week since June 7th. I realize we're still pretty low in terms of the levels. We've seen some more movement in Europe. How much is geopolitical tension factoring in here, and what does that mean in terms of the possibility for moves?
I think in Europe, it's all geopolitical tensions. They're worried about disruptions to flows through the Persian Gulf, moving LNG tankers. And then we're also the last bit of Russian supply that transit through Ukraine. People are worried about that as well. Europe is completely dependent on imports. I'm not aware of any production aside from Norway that imports it into the EU. I should say the EU. And so any kind of risk going on in the world converts into traders' minds as supply risk. And so prices like to jump around when that happens.
Bill, on the demand side, we saw a lot of energy jump today as the jobless claims were down lower than people expected. How much is that the demand question driving the narrative?
Well, I think in the longer term, even in a recession, a mild recession or a slowdown, you have incremental crude oil demand growth. And then, of course, with natural gas and power demand, we have the reindustrialization of America, and we also have, all the talk about AI and data centers. And so the utilities have revised upward their load growth. So there's a kind of a macro play on people want to be longer energy out the curve. Whether renewables or solar beat that, beat the demand growth, it remains to be seen.
And we've been talking a lot about the VIX, which spiked to 65 earlier in the week, and the fact that yen carry trade, we saw that unwind. But also you've seen this unwind in some of the volatility trades that were out there, too. I can't think of a person better to speak to volatility than a natural gas trader.
Yeah, we don't know what people were crying about that day. It's like 3%, 4%, 5%. That we call that Tuesday and Thursday in natural gas land. So, markets are fluid. Infrastructure is, breaking, coming online. We have weather issues on a weekly basis, whether it's hot or a tornado or a storm. So, we're used to that type of volatility. We don't understand the equity guys crying when things drop 3%.